Elon Musk's brother said today's crypto is a non-starter and he's violently opposed to anything that environmentally damaging. Kimball Musk told Input magazine that cryptocurrency, as it stands today, is a non-starter. That's because of the environmental effects of the huge amount of energy crypto mining requires. His brother Elon Musk stopped allowing Bitcoin payments for Tesla vehicles for the same reason. Both Musk brothers think cryptocurrency has work to do. Kimball Musk told Input magazine that he has concerns about crypto's negative effects on the environment. Mining the virtual currency has proven to consume massive amounts of energy, which is why his brother stopped allowing customers to pay for Tesla vehicles in the form of Bitcoin last year, though the company still holds nearly $2 billion on its balance sheet. I'm violently opposed to anything that has that level of environmental impact, Kimball Musk told Input. Crypto, as it stands today, is a non-starter. I violently agree that we have got to fix this environmental issue. Musk chatted with Input about a wide range of topics, including his opinions on wealth and his food equality crypto collective Big Green DAO, which stands for Decentralized Autonomous Organization. The group is built on the Ethereum blockchain and gives each member their individual vote in the decisions that the DAO makes. That kind of democratic setup is central to the ideology undergirding most decentralized initiatives. Musk did tell Input that he has hope in Ethereum 2.0, which is designed to eat up much less energy than Ether and is also projected to be more secure. Ethereum 2.0 will transform the network from proof of work to the more environmentally friendly proof of stake, which experts previously told Insider will make it more appealing to investors. Musk also shared the tips that his brother has given him when it comes to cryptocurrencies. Elon Musk has become one of the online world's biggest mascots for virtual currency, tweeting about the meme coin, Dogecoin, and even announcing that people can use it to buy Tesla merchandise. I don't even know what his view is on crypto, frankly, Musk told Input. The biggest advice I got from my brother is be cautious. Ukraine fundraisers bring out the best, and worst, in crypto. If you try to make money off Ukraine's fundraising efforts, your soul is just as broken as your brain. Cryptocurrency has been shockingly central to the unfolding invasion of Ukraine, where news this morning finds Russian forces capturing a crucial nuclear power plant and other objectives. Some have wondered whether crypto might be useful for evading the devastating sanctions being laid against Vladimir Putin's government and cronies. The answer, probably not. More broadly, the sanctions mark a politicization of global banking that validates many of the points on which crypto was premised. The crypto community has also put its best foot forward with a truly remarkable fundraising campaign. After Ukraine set up official wallets to receive both Bitcoin, BTC, and Ether, ETH, coiners have donated approximately $40 million. For comparison, the U.S. government is currently debating a $6 billion package of aid to Ukraine, so crypto holders have already donated about 0.75% of what the U.S. might, maybe, give. And the crypto arrived nearly instantly, in the midst of an ongoing invasion, with no strings attached. It is reportedly already being deployed to buy supplies for Ukraine's war effort. That makes the crypto donations, dollar for dollar, considerably more useful than U.S. funds that will arrive, eventually. It's a vindication for crypto as a technology, and can't hurt the community's social reputation. But there has been at least one dark lining to the silver cloud, in the form of an apparent display of crass and amoral greed from crypto's infamously bottom-feeding opportunists. On Wednesday, Ukraine's crypto fundraising effort announced that it would be conducting an airdrop to those who had made donations. An airdrop is an unsolicited distribution of a cryptocurrency token or coin, usually for free, to numerous wallet addresses. There were few details of what crypto might be dropped, but a reasonable guess would have been some sort of thank you token with little explicit monetary value. But even tokens with little or no explicit value can do very strange things in the casino-like crypto market. For instance, the Constitution DAO's People token in December reached a market cap of more than $800 million, though it was launched to manage just $40 million in initial donations. That history helps make sense of what happened next, a massive surge in small donations to the Ukraine addresses. From perhaps a couple of hundred donors per hour, the volume surged to several thousand. While this looks superficially like a wave of generosity, it's really anything but. Instead, this surge appears to largely represent an effort to, in one observer's words, game the airdrop. Most appear to have been small donations of less than $30 worth of ETH. According to one analysis, over 20% were from new wallets created only for donations. That suggests the new donors were hoping to make a minimal donation, then get airdrop tokens and return that, who knows? Dash might somehow wind up being worth more than the donations. The generation of entirely new wallets further suggests a so-called Sybil attack, or users pretending to be multiple people so they can claim the airdrop more than once. This sort of behavior has been somewhat normalized by self-proclaimed djinns who spend time maximizing returns of all sorts across crypto systems. There's even a certain logic to encouraging borderline abusive behavior among the users of open financial systems, because it helps test the system's resilience while they're still niche and experimental. But as those systems suddenly collide with the grim reality of war, such Wild West, anything goes behavior looks less like adversarial testing of experimental systems and more like old-fashioned war profiteering. If you're one of those who attempted to manipulate the fundraising efforts of a democratic nation being invaded by the forces of a vicious dictator and former spy, well, just sit with that for a moment. Maybe also sit with the fact that blockchain records of what you did will be around as long as Ethereum exists. It's entirely possible for anyone who's curious and sufficiently motivated to find out who the attempted war profiteers are. You've created a permanent record of your own dishonorable venality. And, in the end, you don't have anything to show for it. Perhaps in part because of the attempted Sybil attack, Ukraine's Minister of Digital Transformation announced Thursday that the airdrop would be cancelled. There was mention of Ukraine issuing NFTs, but it's unclear if these would be an airdrop or a separate fundraising effort. So congratulations, djinns, you rugged yourselves. Not just financially, but ethically. The good news is these shenanigans will likely wind up as a footnote to the broader surge of genuinely helpful crypto donations. That would be the deepest possible vindication of crypto and open finance. Because, sure, there are plenty of selfish miscreants out there. But if you let people make their own decisions, the majority will make the right one. Convex Finance bug causes CVX token to sink on forced token unlock. After a smart contract exploit, locked CVX tokens flooded the market, dragging down prices. A smart contract bug has forced a team to prematurely unlock a huge portion of its token circulating supply, sending markets into disarray. In a Twitter post Friday, the Convex Finance team wrote that it had redeployed the contracts responsible for the vote-locking governance mechanism after the discovery of a bug that would have granted certain users disproportionate rewards. There were no instances of the bug being used prior to deployment of the new VLCVX contract. However, since Convex Finance contracts are immutable and non-upgradable, a new contract had to be deployed. The new VLCVX contract has implemented a fix for this potential bug going forward, the team wrote in a blog post. It's the latest example of the perilously experimental nature of decentralized finance, DeFi, a $200 billion industry where supply shocks, smart contract bugs and volatile prices are often the norm. Convex's vote-locking mechanism is key to the project's token economy, one that allows for users to collect bribes from protocols and direct liquidity deposits into another protocol, Curve Finance, but only if users lock their tokens for 16 weeks. This mechanism plays a key part in the complex, multi-layered battle to control voting power in another protocol's token, Curve Finance's CRV, colloquially known as the Curve Wars. The vote-locking mechanism also plays a key role in managing CVX's circulating supply, with over 72% of the supply locked earlier on Friday. Frequent CVX traders often track major unlock dates, as they can lead to supply and price fluctuations. As such, the sudden, unexpected unlock of millions of tokens has led to a significant supply shock on Friday. Prices fell as much as 20% from $19.10 to $15.22 in a matter of hours. However, large holders have stepped in to add to their positions, and many users have opted to relock their tokens rather than take the opportunity to sell, even during a time of macroeconomic uncertainty due to the war in Ukraine. While volatile, prices have been rebounding throughout the afternoon, as CVX currently sits at $16.55, down 15% on the day. Bitcoin rally evaporates as price tumbles below $40,000 Friday afternoon. The crypto's divergence from stocks earlier this week has proven to be short-lived. Bitcoin, BTC, the largest cryptocurrency by market capitalization, was changing hands at $39,300 at press time, dropping below $40,000 for the first time since Monday as stocks continue to sell off over the war in Ukraine. It's been quite the round trip for Bitcoin this week, with the bulls encouraged by a dramatic move higher from midday Monday that carried the price from $38,000 to above $45,000 early Wednesday. The divergence from struggling stocks didn't last long, though, and Bitcoin's hasty retreat has picked up steam this afternoon. Checking stocks, the Nasdaq is down another 2% Friday and the SAMP 500 index off 1%. The action in Europe is way worse, with Germany's DAX shedding 4.4%, France's CAC 40 down 5% and Italy's stock exchange off more than 6%. Not to be forgotten is the U.S. Federal Reserve, with Chair Jerome Powell on Tuesday, worried about the economic impact from the Russia-Ukraine war, nevertheless promising a 25 basis point rate hike later this month. The U.S. central bank doesn't need more ammunition for tightening monetary policy, but got some anyway in Friday's non-farm payrolls report. The data showed a whopping 678,000 jobs added in February versus expectations for just 400,000. Adding to market pressures Friday was a Bloomberg report the Biden administration is considering banning oil imports from Russia. That has helped add to the big oil rally, with WTI crude now higher by 7.1% to $115.35 per barrel. Bitcoin miner DigiHost aims to triple capitalization with $250 million share offering. Shares are down 13% on news of the offering and drop in Bitcoin's price. DigiHost, DGHI, a relatively small publicly traded Bitcoin miner looking to fund ambitious growth plans, announced Friday an at-the-market share offering for up to $250 million. The company's market cap was less than $100 million as of Thursday's close, making a capital raise of $250 million, even over a period of time, a sizable amount. Proceeds will mostly be used to fund growth and development of existing mining operations. The sale of subordinate voting shares will be underwritten by H.C. Wainwright & Company.
DigiHost, which is based in Buffalo, N.Y., earlier this week announced a fully drawn $10 million credit facility, with a one-year term and 7.5% interest rate.
Shares were down 13% on Friday on news of the share offering and as Bitcoins, BTC, fell 5% to $40,500. DigiHost mined 62.58 Bitcoins in January with a hashing rate of about 415 petahash per second. It said at the time it planned to expand its mining power to 3.6 exahash per second, A/S, by year-end, implying a more than 700% increase from the January hash rate. In comparison, Marathon Digital, MARA, one of the largest publicly traded Bitcoin miners, said its current hash rate is about 3.8 A/S, with plans to expand to 23.3 A/S by early 2023. Latest crypto news: as war continues in Ukraine, crypto plays a key role. Russia's war against Ukraine is in its second week, and cryptocurrency has emerged as an important element of the conflict. The war has sent 1.2 million Ukrainians fleeing since February 24, and more than 2,000 Ukrainian civilians have been killed, according to the Ukrainian government. The human costs of the war are already steep, with no end in sight. Those costs have inspired people across the world to help support Ukraine's defense against Russia, and cryptocurrency has presented a novel way for them to do it. After the Ukrainian government tweeted a request for crypto donations, more than $50 million worth of crypto poured in. The Ukrainian government also announced plans to mint NFTs to fund its military. On the other side of the coin, there are growing concerns about Russia using crypto as a way to avoid sanctions, and the United States Treasury is concerned about Russian cyberattacks on crypto companies. Crypto scammers are also using Russia's invasion of Ukraine to steal money from people looking to help. The situation has brought even more volatility to the cryptocurrency market, and experts predict the ups and downs will continue. Cryptocurrency's wider adoption and its recent alignment with the stock market make it even more linked with the international conflict. Bitcoin is hovering around $40,000 after dropping under $35,000 immediately following the attack, and Ethereum is back below $3,000. Either way, experts advise not to make financial decisions based on news-related panic.